Exchange-traded funds, ETFs, have become immensely popular in recent years. Unlike mutual funds, ETFs trade on an exchange much like stocks. You can buy and sell an ETF's shares throughout the trading day. They passively track an underlying index, similar to how index funds work. Depending on the underlying index they are tracking, ETFs could hold assets in stocks, bonds, or commodities. Here we take a look at the top 10 largest ETFs in the world by their assets under management. There are a few things to keep in mind when investing in ETFs. Those with higher assets under management (AUM) and higher average trading volumes have an advantage over ETFs with lower AUMs and trading volumes. They can track their respective indices more closely, minimizing the tracking error. The higher trading volumes indicate a tighter spread, meaning there is little potential for huge swings in prices. Besides AUM and trading volume, you should also look at an ETF's expense ratio and tracking records to decide if an ETF is right for you. Expense ratios have been declining in recent years. Some of the most popular ETFs have an expense ratio of under 0.1%. If 2 or 3 ETFs tracking the same index have similar expense ratios, it makes sense to go for the one with greater AUM and trading volume. If you're looking for the best ETFs to buy, a good place to begin is with the largest ETFs as measured by assets under management. Unlike their mutual fund cousins, exchange-traded funds, ETFs, that have the highest amount of money invested in them can have advantages over ETFs that have lower assets under management. Before we have a tendency to begin, why don't you hit the subscribe button? And therefore the bell notification icon, thus you never miss any of our videos. Let's begin. How to buy the best ETFs, AUM, volume and expenses. When buying exchange-traded funds, ETFs, one of the most important qualities you'll want to look for is assets under management. Trading volume, expenses, and tracking records are also important data points to research. The reason for the high assets and trading volume is that investors are wise to avoid buying thinly traded ETFs. When there are fewer traders, lower volume, there is potential for greater swings in price, or what is called the spread. This is because, like closed-end mutual funds, ETFs can trade at a premium or discount, and the higher the assets and trading volume, the tighter the spread. For clarity, higher assets and greater trading volume are generally better than lower assets and lower trading volume. ETFs passively track a benchmark index, similar to how index mutual funds work. Therefore, the best ETFs will also have the lowest expense ratios. For example, if you're considering an ETF that invests in the S&P 500 index, the one with the lowest expense ratio is likely to be your best choice. However, if the expense ratios are relatively close, you'll want to choose the one with the highest assets under management. Finally, ETFs with a good tracking record is usually better to buy than those with short track records. The tracking record is how closely the ETF tracks the benchmark. The closer, the better. Going back to the original point, ETFs with the highest assets under management will also tend to have higher trading volume, low expenses, and good tracking. For this reason, the most important thing to look for in the best ETFs is assets under management. These are the top 10 largest ETFs in the world based on their assets under management. The ranking is based on data from ETFDB. The AUM of an ETF is calculated by multiplying the number of outstanding shares by the market price per share. Number 10, iShares MSCI EAFE, $64.3 billion. BlackRock's EFA is among the world's largest ETFs investing in international stocks. As of February 7, 2020, it has $64.3 billion in assets. EFA tracks the MSCI EAFE index, which measures the equity market performance of Europe, Australasia and Far East. EAFE, its expense ratio is 0.32%. EFA has a pretty good average daily trading volume of 22,081,520 shares. Number 9, Vanguard FTSE Emerging Markets ETF, VWO, $65.3 billion. Vanguard's VWO ETF is for people who want to invest in emerging markets such as China, India, Taiwan, Brazil, Russia, and others. Investing in emerging markets is a high-risk, high-reward adventure. VWO tracks the FTSE Emerging Markets All-Cap China A Inclusion Index, which measures the stock performance of more than 20 emerging countries. VWO has an expense ratio of 0.12% and average trading volume of 11,826,518 shares. Number 8 iShares Core US Aggregate Bond ETF, AGG, $73.1 billion. AGG is the only ETF on this list investing in bonds. Bonds are an important part of an investor's portfolio. At just 0.05% expense ratio, it's a low-cost way to diversify your portfolio. AGG tracks the total U.S. investment-grade bond market, covering treasuries, corporate bonds, and municipal bonds. It has an average daily trading volume of 4,758,174 shares. Number 7 iShares Core MSCI EAFE ETF, IEFA, $76.6 billion. IEFA tracks the MSCI EAFE Investable Market Index, which measures the performance of 3,257 stocks across developed countries except the US and Canada. Its expense ratio is 0.07% and the average trading volume is 9,565,971 shares. As of February 7, 2020, it has $76.6 billion in assets. Number 6 Vanguard FTSE Developed Markets ETF, VEA, $80.5 billion. Vanguard's VEA tracks the FTSE Developed All-Cap ex-US Index, which measures the performance of a diversified group of stocks in Europe, Canada, and the Pacific region. It has $80.5 billion in assets. VEA's expense ratio is incredibly low at just 0.05%. Its average daily trading volume is 8,375,162 shares. It's suitable for investors seeking geographic diversification in their portfolio. Number 5 Invesco QQQ, $94.5 billion. Invesco QQQ ETF tracks the Nasdaq 100 index, which includes 100 of the largest non-financial companies by market capitalization listed on Nasdaq. Thanks to the skyrocketing market valuation of technology companies, the Nasdaq 100 index has outperformed the S&P 500 in the last 10 years. Invesco QQQ has an expense ratio of 0.20%. Number 4 Vanguard S&P 500 ETF, VU, $141.9 billion. VU is not only among the world's largest ETFs, but also among the cheapest with an expense ratio of just 0.03%. It has a staggering $141.9 billion in assets. VU tracks the popular S&P 500 index, which represents 500 of the largest U.S. companies by market capitalization. Its average daily trading volume is 2,691,133 shares. VU has low costs and high liquidity. Number 3 Vanguard Total Stock Market ETF, VTI, $145.4 billion. VTI is another popular ETF from Vanguard. It tracks the CRSP US Total Market Index, which includes the entire US stock market of 4,000 stocks. The index covers nearly 100% of the US investable equity market. VTI's 0.03% expense ratio is very low. It has an average daily trading volume of 2,834,835 shares. Number 2 iShares Core S&P 500, IVV, $217.9 billion. With $217.9 billion in assets, 0.04% expense ratio, and an average trading volume of 3,866,419 shares, IVV is among the largest and most popular ETFs. It tracks the S&P 500 index. This is suitable for people who want low-cost exposure to the S&P 500 index with minimal tracking error. It was launched in 2000. Number 1 SPDR S&P 500 ETF, SPY, $316.3 billion. SPY is the largest ETF in the world with $316.3 billion in assets. It tracks the S&P 500 index, and has an expense ratio of just 0.09%. SPY is also highly liquid with average daily trading volume of 60,592,539 shares. Launched way back in 1993, it was the very first ETF listed in the United States. SPY has an excellent long trading history. That's it for nowadays. We tend to hope you learned a few tips. If you're still here, then I bet you enjoyed the video. Provides it a thumbs up, and don't forget to subscribe if you haven't already.